For anybody who is waiting for an engraved invitation to sell dollars or buy gold, because there are some people out there that are saying that you have to wait for the actual pivot, not a pivot in rhetoric, but an actual pivot in policy, where the Fed has to start cutting rates, where they have to go back to quantitative easing. That's going to happen eventually, but you don't want to wait for that. If you wait for that, you're going to pay much higher prices for gold. You're going to get much less for your dollars than if you just anticipate what is going to happen, because the market will reward you if you anticipate and you anticipate right. Now, obviously, if you anticipate wrong, the markets will punish you, right? No guts, no glory. Well, I don't want to be a coward and just hold on to my dollars because I'm scared to buy gold now, or I'm scared to sell them and buy into foreign assets. I am going to have the courage of my conviction and act now, because in general, that's what markets do. They are forward-looking. They discount. The fact that the Fed is eventually going to cut rates and go back to QE, the markets are not going to wait for that to happen to start pricing it in. They're going to price it in anticipation of that happening. And that process has already started. And so by the time we actually get the news based off of these rumors, then it's not going to be nearly as advantageous for the people who get it. Now, I don't think it will be too late. I think if you want to wait for the official first cut in interest rates or the return to quantitative easing, you can do that. I don't think it's going to be too late by any means. I mean, I think the price of gold is going much, much higher. That's not going to be the end of it. That's going to be the beginning of the next stage. But I don't think there's any reason to wait for that. I am confident enough that the Fed is going to pivot that I don't have to wait for them to actually do it to know that that's what they're going to do. Again, I know what they're holding. I don't have to see their cards. I can read the bluff in their eyes, and I am going to place my bets accordingly, because I'm going to win this hand, and I want to make sure I have a big pot. I want to maximize how much I'm going to win when ultimately the Fed is forced to fold and I get to collect that pot. If you remember, go back to 2019. Remember when the Federal Reserve first indicated that it was going to stop hiking rates, because everybody thought the Fed was going to keep hiking rates in 2019. People were looking for maybe 3 more rate hikes, and I didn't think they were going to hike rates. In fact, I was saying that they were done in 2018, that the December hike was it, and that the next thing the Fed was going to do was cut rates, and the markets didn't believe that. And then the Fed stopped hiking rates. And then the Fed did exactly what I said it was going to do. It cut rates, but it didn't really admit to a change in policy. It pretended that it was going to continue hiking rates, but that before it continued with the rate hikes, it just needed to do this little mid-course correction. That's how the Fed initially described that rate cut. It's a mid-course correction, but we are still hiking rates. We're still tightening. We're just correcting a little before the next move higher. Of course, a lot of investors believe the Fed, but I didn't. I called out the Fed. I said this was not a mid-course correction. This was a U-turn. The course is now different. The Fed is going to keep on cutting, and that's exactly what it did. The Fed didn't resume the hikes. It actually accelerated the cuts and ended up at 0 and going back to quantitative easing. So I think what the Fed just leaked through the Wall Street Journal in the face of this bloodbath in the bond market, that, hey, we are going to reduce the pace of hikes, that really amounts to their mid-course correction. That's what they're doing. They're just correcting the rate at which they're raising rates. But what this really is a prelude to a complete change in direction. The next thing you know, they're going to be cutting rates. They're going to be going back to QE. There may be some more rate hikes first, but the Fed is not going to hike rates as much as people thought. It's not going to raise them as fast as people thought. And so the dollar is going to be weakening. Gold is going to be rising. But also what's going to be happening at the same time is the economy is going to be getting weaker, but we're also going to see more upward pressure on inflation because of what's going to happen in the dollar. I see a lot of people in the Biden administration dismissing inflation. They're saying, hey, inflation shouldn't be an issue because inflation's a problem everywhere. They got inflation in Europe, right? Inflation is worse in Europe than it is here. And so why is anybody worried about it? Why are they blaming Biden administration? Because it's a worldwide phenomena, as if that means there's nothing we can do about it. And so Americans should just forget about it because it's just something that's happening everywhere and it's got nothing to do with Biden policies. The fact that the entire world is suffering from inflation, this is not some kind of fluke. This is not some kind of mere coincidence. This is because all these major central banks created inflation at the same time. Quantitative easing didn't just happen in America. It happened in Europe. It happened in Japan. Artificially low interest rates weren't purely an American phenomenon. All the world's central banks had artificially low interest rates. So every central bank created inflation. They all sowed the winds of inflation, and now people all around the world are reaping the whirlwinds. But ironically, the main reason that interest rates were so low in Europe was because they were zero in the United States, and because Europe wanted to stimulate their economy by having lower interest rates than we had in the United States, because we're the reserve currency. And so for them to have a stimulative policy, they needed to get their interest rates lower than US interest rates. Well, we were at zero. So the only way to go below zero was to go negative. As crazy as that was, that's exactly what they did. So the reality is, America is the primary reason that the entire world is suffering from such high inflation. But as a result of that, America actually ironically benefits and has lower inflation than everybody else. But that benefit has a short shelf life. In fact, what the Democrats are trying to claim is that the reason that inflation is lower in the US than it is in Europe is because of their policies, that we have great pro-growth policies, that what Biden has done to help the economy, we are now getting the benefits, and so we have less inflation because of these great Biden policies that he's implemented. And the reason that Europe has higher inflation is because they don't have these great Biden policies. Now, of course, this is all spin. There are no great Biden policies. I mean, there are some policies, but they're terrible policies, and they're not the reason that we have lower inflation than they do in Europe. We don't have lower inflation because we're doing things right and the Europeans are doing things wrong, right? We don't have lower inflation because of anything that we've done right. We have lower inflation because of all the things that the other countries have done wrong. So it's all on a relative basis. The dollar is only strengthening relative to other currencies. It is weakening in terms of purchasing power, but because other countries are also making mistakes, then they're having inflation. We're making similar mistakes. The fact is, we're actually making the mistakes on a grander scale, but because we have the exorbitant privilege of issuing the world's reserve currency, and a currency that everybody buys when they're worried about their own currency, we are benefiting from the mutual mistakes that everybody is making. And because the dollar is strengthening relative to the euro, that is helping keep our inflation low, but pushing European inflation higher. So it's purely a function of the dollar's reserve currency status and safe haven buying that is keeping our inflation low. It's got nothing to do with anything we've done right. It's got everything to do with other people are doing wrong. But since we're doing wrong too, eventually that's going to come back to bite us. And when it will is when the dollar starts to fall, which it already is doing. And the pace of that fall is going to accelerate as we get more economic data that is weaker than expected, and as more and more people begin to figure out that the Fed is pivoted and start pricing that in a bigger way to the foreign exchange market, to the gold market. And once the pendulum swings in that direction, it is going to keep on swinging. And so the U.S. inflation rate is going to get higher as the U.S. economy gets weaker, and that is going to prompt even bigger deficit spending. We're going to get even more fiscal stimulus. And of course, monetary policy is probably also going to adjust, because there's no way you can have more fiscal stimulus without monetary stimulus to make it all possible. So then the Fed has to do a U-turn and go from quantitative tightening to quantitative easing. And that's when the dollar falls through the floor and then inflation goes through the roof.